Do you want the protection that comes with life insurance, but you don't like the limitations of a term life policy? Well, by the end of this video, you're going to have a better understanding of one of the alternative options that you would have in life insurance that could cover your entire life and offer some financial bonuses that are not available with term life insurance. My name is Jake Williams. I'm a life insurance specialist with Step Up Wealth Management. For more information on setting up a comprehensive financial plan, including life insurance, please be sure to subscribe to my YouTube video, hit the notification bell, and you'll be notified anytime I upload new videos. So what am I talking about with this alternative to term life insurance? Well, what I'm talking about is whole life insurance. And just based on the name, you already see one of the differences. Term life insurance is for a term. It is for a specific period, and when that period is up, the coverage is gone. That's nice because it's the cheapest option, and you can cover expenses that you need, and then when those expenses are done, the coverage is gone, and so is your financial obligation. But if you want to keep that coverage, if you want to keep your insurance going for the rest of your life, that can get very expensive when you're trying to re-up your term life insurance later in your life. So what you might want to look at is whole life insurance. By the name, just like where term insurance is for a term, whole life insurance is for your entire life. As long as the policy is still in force, and we'll get into what that means in a second, then you have coverage. And there are some limitations on the very back end of it. If you get into extreme old age, some policies may mature or end at 100 or 120, but statistically, the odds are it will last for your entire life. And the way this works and why whole insurance is so different from term insurance is that it carries a cash balance. So it is going to have a death benefit. It is going to have an amount that gets paid to your beneficiaries if you die, when you die. But the way it's different from term life insurance is it has the death benefit and then it has a cash balance. And those are separate things. The cash balance grows with the premiums that you pay. And there's some other growth that goes in with that I'll explain in a second. But as that cash balance grows, so does the death benefit. So you pay into this policy over your lifetime and you continue to pay. That is one of the drawbacks of whole life versus term insurance, is that you continually pay for this coverage. But as you pay for this coverage, your coverage amount does grow as well. That can be extremely beneficial. And another way that this grows is that cash balance. Not only does it grow with the amounts that you pay into it, but there is also an interest component with it. So you are earning interest on the money that you are putting into this account. That can offer you some financial flexibility to do some pretty interesting things, but that is a whole entire other video because we could go on that for a while. So if you like some of the alternatives that whole life could offer, it is something that is worth checking out. It is more expensive than term life insurance, so that is a drawback, and it is a little more complex, so you need to be able to understand those things. If you are interested in coverage for your entire life, if you don't like the drawbacks of term life insurance, let me know some of the things that interest you about whole life insurance in the comments below. Please be sure to check out some of my other videos to see what term life insurance is, or how whole life insurance, or how life insurance works, or some of the other aspects of comprehensive financial planning. And please, if you're interested, if you want to learn more, click the link below to see if you qualify to become my client.